Hi, everyone. Welcome to another edition of your Daily Five. My name is Chris Kimble, and today's April the 7th. So I want to talk about a few things today on our just kind of a short summary. I want to talk about inflection signals for monthly candles. We just finished a key month with the Russian invasion, opportunities in China, bullish and bearish. I want to discuss today. Wheat, crude oil, and gold did what last month? We'll find out here. Moving average allocation messages that I think are really important. I want to share. Is TLT going to break an 18-year support line? And a monster message from the leader of all leaders we'll discuss today. So let's go ahead and get started. And so our first piece was discussing, if you remember, we were talking about monthly candles. And so this is the Hang Seng index from China. We're going back, 40 years, everyone. Again, this is the monthly chart. But you'll see these three red arrows. And when you think about if we could even go back further in America, the Dow peaked, everyone, in 1965, and it was at the same price in 1982. But you'll notice what was China doing here? It was throwing off a triple bottom, and then you see, look at these monthly wicks, and they tended to really see rallies after that. So I'm just going to pause for a second. As you look at this chart, do you see any other similar bullish monthly wicks? How about some of these? They're all over the place, and you see they often take place at important bottoms. But I want to talk about also the reverse happens when you see a reversal wick. I think you really ought to pay attention, and you'll notice several times we can find these bearish reversal wicks, and they led to falling prices. And so, as most of you that are watching this know, that these wicks and reversals take place in every asset on the planet. But I want to dig in a little bit deeper and share with something that I've been discussing. We even talked about this on the last Daily Five, but this is a support line that's been in place since the early 90s. So this is a 30-year support line that's being tested, and you can see a bullish reversal here, another one here, and another one here, two here. And so to me, this line in the sand has been very important. It's been a place to buy. And so I want you to take notice that this past several months ago in 2021, you see a fairly large reversal in the Hang Seng index, and then it's went weak. What do we see last month? Actually, last month, folks, was one of the larger bullish reversals since the financial crisis low. The thing that I want you to take notice of is we do see this bullish reversal, but it did close below this 30-year support line. So we got a little bit of a conflict here, don't we? We have, to me, the 30-year lines is extremely important, and so is the monthly reversal. And so what I want to kind of leave this with is what asset could do well if China continues weak and this reversal was a fake out after breaking 30-year support. So one of the places that a person could take advantage of further weakness if it takes place in China is FXP. This is an inverse Hang Seng 2x inverse ETF. So it's got a lot of volatility to it, folks. But if you're looking for a place that you could score on defense and you think, wow, 30-year support line, maybe I should really pay attention to that, I want you to hang on and keep watch on the Hang Seng index. So we're going to stay on monthly reversal wicks. Earlier I said wheat, gold, and oil did what last month? So we're going to answer that question. So in the upper left is a chart of wheat futures, and you'll see at one, the largest bearish reversal wick in the history of wheat. And it took place last month, again, during this invasion. We hear stuff about the Black Sea and its interruption of wheat. There's a drought in the Midwest going on. I'm coming from Kansas. I think we produce more wheat than any state in America. We're having dry conditions, but it's even worse in Oklahoma and Texas. But I would suspect the market already knows that. But folks, this wick up here is a monster. It's almost a 40% wick. And look what happened here. So those monthly wicks were definitely important. Any other asset do that? Well, 2 years ago, this past month, crude oil made the largest bullish wick in the history of crude oil. And it closed the month at 20. How many people thought in the COVID crisis that we'd see crude oil go from 20 clear up to 130? Well, the thing I want you to notice is crude oil had the largest bearish reversal wick in its history last month at 1, while it was testing this series of lower highs. And ironically, this is where Putin invaded Crimea right before crude oil collapsed. And so this is another important reversal potentially, and to me, the most important commodity on the planet. What about gold? It experienced the same thing last month, the largest bearish reversal wick in its history, right below the highs of a little bit over a year ago. So another critical level. One of the key assets that didn't do something similar. So we see wheat, crude, and gold doing this. What if we turn to corn? On the flip side, it's a grain. You don't see anything like that taking place. So corn is sure at a big test that didn't send a bearish message. And if corn would break above these highs, it could really rally to the upside. So one of the easy ways for people that aren't into the futures market to play corn is with a Terracrum corn fund. It's an ETF that can be traded. So I want to share with you something that my wife is a CFP, and I put this together over like 15 years ago for, and it's to help with asset allocation and just long-term perspectives. And so here's the S&P 500. We're going to see 6 charts here, and they all have the same moving averages applied. 100-day moving is in red, 200 is in blue. So you see a big test going on from the S&P. It's right at both moving averages. How about commodities? Well, you can see you had commodities break above both moving averages here a couple of years ago, and they're still screaming higher moving averages are strong, so it's encouraging there. When we go to Europe, look what's happening to EAFE. The moving averages is below, and they're rolling over. What about real estate? It's one of the few sectors that right now are above moving averages. What about junk bonds? There's stocks and drags, so I think you long or just stock investors should really pay close attention to junk bonds. You can see they started sending a concerning message months ago. And so if all of a sudden this weakness surprised anybody of late, I'd say, you better put this stuff on your radar because it wouldn't have surprised you then. And then lastly, government bonds. So this is a 6-pack that has a lot of global reach, a lot of different aspects, but I want you to always to be thinking about these moving averages and how they're applying. So there's only a couple that are positive here, which is commodities and real estate. The S&P is still positive, but it's obviously at a big test. And speaking of big test, we've all, I don't know who coined it, but I like the idea that charts have memories. This is the Dow. We applied Fibonacci to the 2007 high, 2009 lows. You can see it hit the 161 level, traded sideways for almost 2 years. But then once old resistance became new support here in 16, look how it rocketed higher. And what's the chance, everybody, that 2 years ago, last month, on the COVID crisis, that it came right down and tagged just to a T and then rallied off of that. So the takeaway on this chart that I want you to be aware of is the Dow's testing the 423 extension level off the 2007 high and 9 lows, and it's been struggling for months. So this is still an 800-pound gorilla up here. The most bullish news for the Dow and many other stocks would be a breakout here. Bulls would get really concerned and we see further weakness just below this heavy Fibonacci extension level. And don't be surprised if you could see some window of choppiness take place, just like we saw here for 2 years. AD line, we saw a bearish divergence, in 2007. We're seeing another one here. So as I've shared many times on this, if you only had one chart to look at on a deserted island, look at the AD line. So you see weakness there. Junk bonds, here's just another close-up look. You're seeing they're weak. They're sending still a concerning picture to stocks. This is a long-term, multi-decade Fibonacci level. And like I've said to my customers, the last place on the planet that you want to see selling get started is this identical Fibonacci level that's based upon 2 different extremes in Fib price levels. And we're actually seeing that right now. The best news for the bulls is the Dow breaks above these. It's really way bullish for many percentage points, higher. Look what's happening with bonds. We're a big 18-year support test after the worst 2 years in the history of TLT. One of the ones that I want you to look at real quickly is natural gas. I've never seen anything like this in the thousands of charts. This is the monthly closing high here in 09. Last year's monthly closing high is trying to break out. And the thing that intrigues me is the next resistance level is almost $14. And so if NATGAS continues to show strength, UNG, LNG, and Boyle should do very well. This is the semiconductor S&P ratio, and the thing this is the leader of all leaders that you see. This is an upward trend since 2009. So to me, one of the most important things in the leadership role of semiconductors is the critical support test. I mean, the trend is up. Here's another Fibonacci support level. You see a large bullish reversal wick last month here. So currently support is support, everyone, and this is the leader of all leaders. But don't please keep this on your radar, because if support fails, if support would fail here, that would be a big deal to tech and to the broad market. So in wrapping things up, please look at monthly candles. These inflection signals can just be monster important for trend changes. There's big opportunities in China. Do keep a track of those large wicks on wheat, crude, and gold. I want to kind of wrap up TLT. If interest rates break an 18-year support line, TLT will probably see a lot more selling, and there's a keeping track of the semiconductor index. So thanks again for being part of your Daily 5. Thanks to StockCharts for allowing me to be a part of this, and you can get a discount to our services by going to kimblechartingsolutions.com/StockCharts. Thanks, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.